out this solar cycle chart on CL, and I use the traditional methodology. This is the last solar peak out here, February 27th, 2014, and I projected out 150% and 200% of the gap between the solar peak and the solar minimum back here. And these big lines right here are the primary cuts, the splits. So we'll call this primary split. And what I'd like you to see is that right at the primary split, Dennis, can you see the reaction? How a bottom comes in right at that first pullback run. And there's this just massive reversal to that huge drop down around the $70 a barrel. So that's a primary split. And then if we go looking for the next one, I want you to see, because the last one was green and we're oscillating, right? The next primary split from the solar cycle was this Jimmy Jobby. And I'm continually fascinated by how the price action reflects, and even the day of the price action reflects this bullish candle just before the drop and this little stop run here, the little double top on the pullback. Okay, so that was a primary split. And again, we're seeing those cyclic moves inside of those. And now here was the next primary split right here. And Ron, check out the reaction of the candle the very next day off of that primary split reversal. You have this evening star pattern, right? Or morning star, forgive me. Just a drop and then an absolute upthrust candle. It's the biggest upthrust candle, Dennis, in weeks before that, and it just pushes price back up towards the 50s, mid to high 50s. And then I started breaking it into smaller swings. And that's where you see this first yellow line. That occurred back on March 23rd. And Ron, pursuant to the stuff you learned at Force, you see there's a pattern 4 just to the left of the secondary split candle right here. That red is a pattern 4. And Dennis, it just pushes right up into that high. The next secondary split is right here, where I have that green dot. And again, this is all related to the number of sunspots on the surface of the sun. And back in, let's see, July, we had that next split right here. And Dennis, you can see that successive push higher and higher. And as we come into this area, guys, I've been breaking it into the smaller and smaller chunks, with the thin blue lines being the very smallest of splits. And something very fishy happened in crude back near the bottom. Something very fishy happened in crude back near the bottom. So Dennis, when we had the big swing, price was down here. It had bottomed around $43 a barrel. And we can see there was this really good reaction. Just sort of this iconic reaction at the green buying pressure time, right? So we see that, boom. And then we get to the next split. So look at it this way: split 1, split 2 in the middle, split 3, and split 4. The first split, Earl, it just drops right down, right on schedule, right? Well, When they got to here, it becomes a pattern 5, the first inversion. And Dennis, when we see one inversion like that, we usually see 2 in a row in relation to those splits. So the first pattern 5 Earl, it just kind of drives it down right there, right on schedule. That becomes the high, the stereotypical last stab, stop run, and it just drops. Now, right here is where the shite hit the fan. Because Dennis, there's 0 reaction to the downside on that split. 0. Earl, it does not go down at all. Larry, it just, boom, straight up. You can see the high forming. In fact, if I split this out and we zoom in, Dennis, do you see how it's like putting in the left half of a reversal, and it should start to come down, and there should be some symmetry to this move. You can almost see it. Big move up, doji, 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 and then it should roll over. No. Somebody hits the afterburners and just drives it up. Okay. Then things normalized. And I want to show you where we're at in crude because it's very interesting. And one of the things I've done with this workspace, if you're able to load it, is, Dennis, I've put the resonant angles in. At all of the, I found the resonant angle for crude on a daily chart. And then, Earl, I put it on all of the closing prices for the splits. And a really interesting thing started to take place. Let me show you what I mean. The very next split, Dennis, was this line right here. Let me put a vertical line right here, and we'll blow it up so we can see it a little better. How do I change that? No, I don't want the data series. 500 user-driven improvements. Piece of trash. Oh, can't say that. I don't want to get another email from Ninja. You're bad-mouthing us. Here. So on this split, Dennis, I'm looking for, to the left of the line, a reaction, and we get it. To the left of the line, we got the reaction. At every one of the buying pressure splits, Dennis, this thing is taken off like a rocket. So right here, the green dot, pull back, boom. Pulls right back on to its resonant angle, goes up. Here comes the next micro split, 2 red arrows here, waiting for the breakthrough. Boom, there's the breakthrough. You're long from about $60. We get to the next split. It's a pattern 5. Pattern 5 means we can't go until it breaks the high, which was at 62.25. So we're long in crude again right there. And now here's where things get really cool. Can you see how the resonant angle is being obeyed right now, Dennis, on the daily chart with the solar cycle? Let me really drive that point home. I want you to see, I don't know how to draw this appropriately. I want you to see the places where it's bouncing or touching the resonant angle. There's one. Here's one. Here's the high. They broke through the high here, and now we're up along this line, guys. Right there. Okay, so when it was down below, you get the arrow line here. when it was down below, they were following this cycle's resonant angle line and pulling back to it from down below. So this new region involves heavy resistance right here. In crude right now, using this solar cycle method that we've used and deployed really successfully in the past with the E-mini S&P, we're coming into this next split, Dennis, right here, right on this day. Okay, and can everyone see how we're kind of coming into this corner? The institutions are driving us into this time price wedge. The time price wedge right here. If I connect my data to NinjaTrader 8, let me make sure. I'm going to connect this to KINETICK full. That's the one I want. Larry, that's great. So all the lines are coming up and all the dots are in the right spot. You're matching what you're seeing. Your charts match what I'm showing, in essence. All right, that's wonderful. Good, because that's going to help a lot of the crude traders out. Here's what I wanted to show you guys. If you look at what's happening in CL right now, Bob, I'm not sure. How do I know that? So on my charts, it's trading hours is use instrument settings. That's what I have set up, use instrument settings. Here's the thing. When I did the analysis with the customer last night, we were a little higher than we were. These are the bounds of price right now, in between. Ron, it's following the resonant angle on the stop run right here. You can see this first high up at 64.75, the next high up here at 64.95. It's reasonable to assume that as we come into the split day today, to see a spike as high as 65.03 to be precise. So just above 65 is that last stop run area. Today is the split day. Dun, dun, dun. Today is the split day. Again, when we're recording this, it's 8:34 Eastern, January 17th. So we're still a couple hours away from the crude inventory report. It's important for you guys to understand there are sort of two areas here that are important and in play. Number one, the resonant angle for CL has us with support at 62.75. Support at 62.75. Okay, so if they drop it down low, anywhere between 62.75 and the worst case 62.21 is going to provide a short-term bounce off of that level, a pretty big one in terms of possibilities. And then in terms of resistance, anywhere in the 64 high 60s, 65 to 72, as high as 65 itself is going to be a resistance area. Okay, so far so good. And then you can see off to the right where the next split is. Over here, that blue line. Oh. Okay. So you guys have this workspace now, and you can kind of follow in my footsteps and see where everything is and where we're tracking and where the next green line is going to be. So this next green dot, if you copy paste it, will be just to the left of that blue line. So Dennis, that will be 1, 2, 3, 4, 5, 6, 7, 8, 9 days off to the right before we have another one of these. Does that make sense, everybody? All of these signals are based on the number of spots on the surface of the sun, the ripples and the waves of energy arriving at Earth, driving human psychology and behavior. It is in every way reminiscent of the warp signals that we're studying, the prime signals, and those of you that came to Force should have a really strong vibe as to what's happening in here right now. This market is exhibiting periodicity, resonance, all based on that one phenomenon. Okay. So far, so good. If we pull back out to a daily chart, there are two other pieces of information. One using the Flux Daily Cycle Marker, Tacheon Alpha. The other is Tacheon Orion. And can everybody see what's going on? Where we are relative to those hallmarks, those touchstones. So with the Tacheon Orion over here on the right, today is the Orion phase A. Today is the phase A event on the Orion chart. And I want you to just go back and look, Earl, and see when we're at a new high in Orion, there tends to be a sell-off in that area. Okay? When we're at a phase A in Orion at a new high, there tends to be a consolidation effect or a drop down. Okay? The last time we came into a new high with the angle that we were sort of right here back in September, October. Same thing over here back in August. So we're seeing that net effect now kicking in. And also we're on the phase 4 in the daily cycle marker chart. So a phase 4 signal, that was yesterday. And we can get a nice understanding of what usually happens in a phase 4 at a brand new high. So let's go take a look. I'll get rid of the drawing tools here. So when the phase 4 was at a brand new high, I'm just going to put an arrow. That was one. Earl, this was one. It's pretty obvious from these three, but you can make an argument for each of these two that they were brand new highs. This one, though, in terms of the prior swing down here, but not really. And this one was a brand new high, but it blew right through. So that's important to note. Here's one right here. So let me just check something here real quick. Make sure I understand what I'm seeing. Boom, boom. Yep. So in CL right now, we have a pretty defined, trend channel that crude was in. And now up around here, you can see it's starting to go into a consolidation mode or a breakdown. If we look at the candle bodies, that's sort of what's going on, and you can see where it's shaking loose on either side of that with the stop runs. So on all three planes, this signal we've known this now for about a week. This signal we've known about for a month. And then the solar analysis we've known since 2014. All three of those levels are showing crude either going into a choppy daily zone where there is consolidation now, or a significant retracement. If you're following crude along at home and it closes above this white line right here, that will be significant in that it means the next projected target is the white line above it. Okay, so you keep an eye on that level there too. Any questions about that? We'll be looking for the next press up when we get to this bar right here that I've drawn at the next split. Good deal. Good deal. And I'll resave that workspace file with the extra stuff on there that I've drawn. Save. All right. Okay. Enough about that. File. Workspace. Close this workspace. No, we'll just get rid of that. Okay, so now I'm going to exit and restart NinjaTrader. And we'll go down into the lower time frames, intraday, and watch for some setups.